All right. Going to go ahead and kick us off this afternoon. Thank you. Hello and welcome. You are joining us for Direct Pay in the IRA, Lowering Energy Costs with Clean Energy for Tax-Exempt Entities and Governments. Thank you for joining us. I am Marissa Olszewski. I'm the Environmental Policy Manager for the Maryland League of Conservation Voters. And I am pleased to be joined with three people you will be hearing from in today's webinar. We have with us today Congressman Hoyer, who is our representative for Maryland's 5th Congressional District. We also have our technical expert joining us, Rachel McCleary. She is an IRA implementation specialist at the Treasury. And Gino Cap will be joining us from the National Housing Trust. He's a solar asset manager there and will be sharing an in-process example of using direct pay. Our goal with today's webinar is to provide important, useful information to help nonprofit organizations and governments throughout Maryland to better understand direct pay and how it can be leveraged to lower costs and access clean energy resources. Before we jump in, we would love to get a better sense of who is joining us for the program in person right now. And so I have a couple of survey questions that I will share out and people can tell us where they're joining from. Looks like we have people sharing in the poll. Thank you so much for taking the survey. And we do have most people saying they know a little bit about direct pay, but not much. So hopefully we can remedy that with today's webinar. And we are mostly represented with local government, with nonprofits, excuse me, but we do have people joining from local government and other. So thank you so much for taking that poll.
Okay, there we go. Thank you, Congressman. Thank you so much, Marissa. I really appreciate the opportunity to be here today. As Marissa mentioned, my name is Rachel McCleary. I'm a senior advisor in the IRA program office. And in that role, I focus specifically on stakeholder engagement across all of the roughly 24 clean energy tax credits that Congressman Hoyer and so many folks poured their heart and soul into at the end of 2022. So my office in particular is really focused on the advocacy, success, and delivery of these programs as they're made available to the public. So I have a lot of brilliant colleagues who are actively working on providing more clarity and information on what the statute means for taxpayers. My job is to make sure information like that is given to you all and that it's given to you in a digestible way, in a way that understands, the complexity of the tax law that we're in. And that's so important because if you all don't understand it, then you can't take advantage of it. And our goal in this office is to make sure we're driving that uptake, especially with nonprofits, state and local governments, and consumers who are truly brand new to so many of these federal programs. So with that, we can go ahead and get started. If you can move to the next slide, please. So first, just a couple ground rules. Real quickly, this deck provides an overview of IRA provisions for general informational purposes only. This is not meant to be tax guidance. The content in this presentation is based on regulations and other tax guidance, and it's also going to rely on some simplifications and generalizations to convey high-level points about tax provisions. Ultimately, we strongly encourage you to refer to guidance issued by the IRS for detailed information on the rules associated with the IRA. Next slide, please. So as some of you may know, the IRA makes the largest investment in clean energy in U.S. history. Marissa had mentioned that at the very top. The bulk of IRA investments flow through the tax code instead of direct government spending. In Maryland, in particular, under the Biden-Harris administration, private companies have announced commitments to invest $3 billion in 21st century industries. That's clean power, EVs, battery, manufacturing. $3 billion going straight to Maryland because of this manufacturing boom that the Invest in America agenda has created. And the IRA, we know, is driving much of this boom because of these tax credits. It's creating jobs, it's saving consumers money, and it's also accelerating the nation's transition to clean energy. It's going to reduce volatility of the cost of energy, which is so important to consumers and those who are on this call, but it's also going to simultaneously increase our country's energy independence, which is so important for our long-term supply chain and manufacturing goals. Next slide, please. So the Treasury Department is probably not an agency that many of you on the phone are used to dealing with, especially when it comes to clean energy. We are, of course, the federal agency responsible for administering the tax code, and we're really proud and very excited to be playing a central role in implementing these clean energy tax incentives. So our activities can be broken down into 3 different buckets. First, we're quickly developing and issuing that tax guidance. That's the clarity I was referring to earlier, to provide certainty around the law, how the law's tax incentives will operate in actual practice. And then we're also working with the IRS to put in place modern, streamlined processes for taxpayers to claim clean energy incentives. When the IRS has the equipment and the tools and the staff they need to enforce these new provisions, the provisions have success. So connecting those dots between the funding we got with the IRA to make the IRS more modern, all of that will benefit a lot of what I'll be talking about today. And finally, the building's focused on conducting stakeholder engagement and outreach to inform our approach and to educate the public about the benefits of the law that are now available. Next slide, please. So what is direct pay? It was very interesting. Thank you to Marissa for sending around those survey questions ahead of time to just get a sense of where folks are at. And it seems like it runs the gamut. So for those of you who are brand new to this, you'll learn quite a bit. For those of you who are experts, I hope this isn't too redundant, but if anything, maybe validating for how you're approaching this. And again, I think there's something for everyone as I'll kind of dig into it. So for those who are brand new, direct pay is this novel mechanism that was included in the Inflation Reduction Act that allows tax-exempt and governmental entities that do not owe federal income taxes to receive a payment equal to the full value of tax credits for building qualifying clean energy projects or making qualifying investments. And unlike competitive grant and loan programs, which I'm sure many of you on the phone are very familiar with, where you may not receive an award, you fill out an application, you go through the process, direct pay, known as elective pay in statute, allows entities to get their payment if they meet the requirements for both direct pay, again, that's the means to getting a credit, and the underlying clean energy tax credit. So the exact action you're performing to either build a cleaner technology or to invest in clean technology. And the entities eligible for direct pay at the Treasury Department, we refer to them as applicable entities, would not normally owe federal income tax. However, by filing return and using direct pay, you can receive tax-free cash payments from the IRS for clean energy tax credits earned, so long as all the requirements are met, including a pre-filing registration requirement. And that's largely what I will be talking about today, how all of these different pieces to actually claiming this credit fall into place. Next slide, please. So what does all of this mean in practice? And I'll get to that in a minute, but before I do, I just want to kind of ground us all in the sense of the potential of direct pay. So we often refer to it as a force multiplier when it comes to investments in the clean energy transition. The direct pay amount that you can get per project depends on the tax credit being claimed and the specific features of that project, but it can be very significant. Another extremely important part of this mechanism is that grants and loans, many of you that you might already have, or maybe you're being applying for the certain programs, they can be used in conjunction with direct pay on specific projects. You can stack your funding. So if you have upfront funding that comes from a grant or loan, that same funding you can use in your project and still claim that tax credit at the end. So what we like to say is that direct pay does require clear project planning and compliance. You certainly need to plan and be thoughtful about how you're going about this, but it does not require a nonprofit to compete for a limited pool of competitive grant dollars. Next slide, please. So I had mentioned these applicable entities, which is a statutory language for those who are able to use direct pay. And you can see there's a ton of different entities here. Again, I think many of whom are represented on this call, but this does include tax-exempt organizations under 501A, including under 501C and 501D organizations, in addition, of course, to state and political subdivisions like local governments. This includes schools, hospitals, public or nonprofit ones. It includes all kinds of different levels of state and local governments. So again, the applicability of who can take access to direct pay is truly wide and large. Next slide, please. So I've mentioned these underlying tax credits, these clean energy tax credits. So there are roughly 24 clean energy provisions in the IRA, and many of them are tax credits for, again, either developing, building, maintaining a clean energy project. So we like to think of these in buckets. So we have energy generation and carbon capture tax credits, manufacturing, vehicles, and fuels. And the value of the specific credit in one of those buckets depends on statutory provisions related to the credit itself and the applicability of various bonus provisions for certain credits. And I'll talk about those bonus provisions and how they all fit in here in a minute. But by and large, the bonus provisions are designed to incentivize the creation of good paying jobs, domestic sourcing of materials, and location of investments in low income and energy communities. These are meant to increase the amount that you can get back in this tax credit, which is why those provisions are so meaningful. So in thinking about how to structure and finance specific projects, it's so important to fully understand the requirements of these bonus provisions as well. Next slide, please. So here's the list of those 12 applicable tax credits. And I am not going to go into these line by line. I had mentioned the industries, which are outlined here, but I will note that the IRS has this document available to download on irs.gov/elective pay. Again, it's elective pay because that's what it's referred to in statute. So it's irs.gov/elective pay, where you can download a list of all of these 12 credits. What you're seeing on my screen here are all the energy generation and carbon capture tax credits. From what we're seeing so far, these are certainly the ones that most applicable entities are seeking to claim when using direct pay. Next slide, please. And here are the manufacturing, vehicles, and fuels credits that I had mentioned. And again, we're seeing a lot of interest in certain vehicle ones. The EV charging tax credit, that's known here as the alternative fuel vehicle refueling property credit, is a popular credit. And then we're seeing others too, across the board, also for private companies who in certain cases are eligible if they don't have tax liability to use direct pay. Next slide, please. So again, I had mentioned these bonus credits and requirements that can really significantly weigh the amount of credit you're getting back. And again, it's important to think about how this could actually impact, how these provisions you see on my screen can impact the dollar value of what you get in return. And so to do that, I'll just walk through a general hypothetical. So say a nonprofit or entity on the call is looking at a 2-megawatt solar farm where the cost would be $2 million. Under direct pay, the entity, the nonprofit, the state and local government could file for an investment tax credit, that's one of the 12 tax credits, of 6% or $120,000. But because of the bonus provision relating to paying prevailing wages and using registered apprenticeships on the project, that 6% investment tax credit can quickly grow to 30% or $600,000 in direct pay. Now, if the project is located in a census tract that qualifies as an energy community, that 30% then becomes 40%. And if the project meets domestic content requirements, the tax credit that was originally equal to 6% of the investment cost can instead be equal to half of the investment cost, or $1 million. Now, I am not very good with math, but when we think about how all of those stack up, $1 million tax credit off of a $2 million project is significant. And again, that outcome is entirely dependent on how these cross-cutting bonuses and provisions play into the specific project that you're building. And now is a really good time to step back and recognize that this is not only novel and new, but extremely complicated. Fortunately, there are a robust set of materials, again, on irs.gov/elective pay and treasury.gov/IRA. However, we're working with the IRS on building out some additional materials that more clearly demonstrate these if-then scenarios with some of these cross-cutting provisions, just given how significant they can be in determining whether or not to even pursue elective pay. Next slide, please. So what types of projects might be eligible for direct pay? You saw the underlying tax credit that explains what you need to do to get that tax credit. But direct pay essentially will allow applicable entities to do things differently and to do different things. So anytime, for example, a tax-exempt entity is considering the future of its building assets, it should be looking to funding opportunities under direct pay or elective pay. St. Andrew's Episcopal Church in Pennsylvania expects to save $20,000 in tax credits from installing solar panels on their church, and $4,000 a year between their electric bills and credits for producing the electricity. So this is a great example of how a tax-exempt entity did the solar installation. They have solar panels on their roof, and because of the Inflation Reduction Act, they'll get $20,000 for that. But then moving forward from the energy they're generating, they'll expect to save $4,000 a year again in their electric bills for these credits for producing electricity. So this goes back to that overarching theme of the Inflation Reduction Act, reducing costs for consumers, reducing energy costs for businesses, and how all of these things work together in practice to get to this end goal that St. Andrews is pursuing. And we are hoping that additional entities who are pursuing elective pay, who are building these projects, are telling us about it, that they're telling others about it. We really understand the power of word of mouth here with this provision, just because it is so new. And so many tax-exempt entities have never worked with the Treasury Department in this way, that we look forward to seeing more success stories as this provision continues to be implemented. So with all of that, I hope everybody here realizes that direct pay is a powerful new financial tool to make necessary investments to achieve goals related to the clean energy transition. And that includes improved health outcomes, reduced reliance on the grid, and again, those potential cost savings. Next slide, please. So here are some potential use cases that you can be thinking about when, again, you're looking to claim this credit. And it's because depending on the type of project investment, the structure of the financing, its locations, and again, whether it meets these certain requirements, again, we have a wide scale of the types of percentages that you can achieve. So in the case of community resilience projects, elective pay up to a 50% tax credit on investment in solar storage and microgrid controllers is available. Same with community heating projects. If anybody on the line is interested in pursuing something like that, an applicable entity can develop central geothermal systems to provide heating to community buildings and residential households, and potentially receive an up to 50% credit on investment in that property. We're actually seeing a lot of colleges pursue this option too, which has been very interesting, and hopefully that can be an area where folks on the phone can listen and learn from other success stories. Next slide, please. And again, back to this point on cost. We know that capital investments in clean energy can result in operational cost savings. But some of the biggest challenges that governments and nonprofits face is the ability to find that upfront funding for capital, even when the investment can produce long-term savings. We are certainly not unaware to that. But when it comes to clean energy projects, direct pay can help solve that problem. We want to ensure that the resources are available when communities need them, starting now. And you're seeing here some examples of folks that are already doing it. I had mentioned universities pursuing the geothermal heating projects, and Ball State University estimates that they'll have an annual savings of over $2 million for their central geothermal heat pump, replacing an aging coal boiler for, again, their college campus. We know that 10 of the largest municipalities in Arizona are going to estimated to save $80 million over 10 years just by electrifying their fleet. That is another credit that's available for use under direct pay. And with the solar microgrid, 50% savings in annual electricity bills installed by an Indian tribe community in California. We're seeing all of these stories and all of these estimates, and we know that it is all woven together. And again, will help us get to those greater goals of being able to have that long-term energy cost reduction. Next slide, please. So I had mentioned at the beginning that you can use direct pay with grants and loans, which again, I hope to many on the call is particularly relevant. And we did that purposefully. That's a special rule that Treasury wrote to make these credits more applicable. So if an investment-related credit property is funded by a tax-free grant or forgivable loan of any kind at all, it's a very wide interpretation. Entities would get the same value of the eligible credit as if the investment were financed with taxable funds. provided, of course, the credit plus restrictive tax exempt amounts don't exceed the cost of the investment. So here's an example of what a school district could do with something like that. So say a school district receives a tax exempt grant that's $300,000 to purchase an EV school bus. Under the IRA, commercial clean vehicles are eligible for tax credits of up to $40,000. Now, the school district purchases the bus for $400,000 using that grant, and say $100,000 of the school district's unrestricted funds. So that makes the basis in this project $400,000. And the school district's clean vehicle tax credit, or 45W credit, is $40,000. So since the amount of the restricted tax exempt grant plus the amount of that clean vehicles tax credit is less than the cost of the electric bus, the school district's clean vehicle tax credit is not reduced. Next slide, please. So you might be thinking, this sounds great. I like how these numbers look, but you also might be wondering how you actually physically claim this, having never filed a tax return reform before. So first, you need to identify and pursue the qualifying project or activity. And that means you need to know what applicable credit you intend to earn and use direct pay for. And then you complete your project and place it into service. Now, this is important for those who are new to this. We are still talking about the tax code, which means you can only claim the credit after you've completed the action. It's like anything else when you're filing your personal tax return. You must have already completed the action in order to claim it on your tax return. You need to determine your tax year, if not already known, to determine when your tax return will be due. And then you complete this pre-filing registration system with the IRS after earning the underlying tax credit. Now, this pre-filing registration process is brand new. This system launched late last year. We call it IRS Energy Credits Online. And it launched in part because of that IRS modernization funding that was included in the Inflation Reduction Act. There's a whole system for this and a completely different set of educational tools and resources that I'll talk about in just a moment to walk through all of this. But this was the first year that entities had used IRS Energy Credits Online. So if you're thinking, I have never heard of this before, welcome. This is still very new. This was kind of our bellwether year. And so far, we're really seeing positive returns. So you register. That's not a determination of the amount or the validity of the credit. Then you file your tax return by the due date or extended due date, and then you make your valid direct pay election. And then you receive the payment after the return is processed. The IRS was able to process returns on an average, or process the pre-filing registration and return element within 45 days. So for those who were using this past tax filing season, the response rate at which people were getting a tax credit back because of direct pay was actually in a lesser amount of time that a lot of other tax credits were being issued. And so we largely view that as a success so far of what the IRS has been able to accomplish, and we look forward to what they plan to do next year. On that note, we have not yet launched the information to be able to provide the IRS on this upcoming tax filing year. Again, we're in the middle of July. The tax filing season, of course, wrapped in the spring. It will open again in January. And we hope in the months prior to that, we will have new information on how an entity can go through the process next filing season that will be out hopefully shortly here. Next slide, please. So for those who are in this pre-filing registration place already, those who have maybe asked for an extension through November because they are still trying to claim something from the previous tax filing or from the previous tax year, there are resources for you and real people resources. The IRS is offering office hours to help entities with this pre-filing registration process. I have links here on my slides, which will be circulated after the fact, but I also provided the Hoyer team with the full list of office hours, which extends through the fall. And again, these office hours will be with IRS agents specifically meant to help you pre-file your project with this new IRS Energy Credits Online apparatus. But for real-time updates, if you want to get information about office hours or any other direct pay information in your inbox, please go to IRS e-News subscriptions. and select tax exempt and government entities. That is the mechanism that the IRS communicates with nonprofits on direct pay updates. So if you want to get more information, that is where you need to go for those real-time updates in your inbox. And again, if you are in the process of trying to pre-file a project, these office hours are the place for you to go. So we hope that these will work out with your schedule. And again, the Hoyer team will pass along the full slate of office hours that are planned through October. Next slide, please. So I wanted to just quickly go over some common questions that we get a lot of times from nonprofits and low capacity state and local governments about direct pay. And of course, like any good small entity, we often get asked, what are the risks? What happens if an entity unexpectedly runs out of funding to complete the project? We strongly encourage applicable entities not to file for direct pay unless they have earned the underlying credit. Entities need to be willing to commit the resources to address the two primary areas of risk: project completion and, of course, compliance. Project completion risk is related to the failure to put a project into service. Again, you have to put the project into service in order to be eligible to claim this tax credit. So if there is a nonprofit organization that develops a project to install, let's say, a solar microgrid, but the project is never completed, that project would not be eligible for direct pay. And then there's compliance. Now, this is a completely different set of issues. This has to do with ensuring that a fully completed product meets all of the underlying requirements of those tax credits, of that investment tax credit, of that production tax credit, and any of the bonus provisions being claimed. So failure to do so could result in a loss of all or part of the value of the credit. Now, both of these are common issues for many applicable entities when they want to receive federal funding through grants or when they benefit from other provisions of the tax code. Grant funding, for example, can be rescinded when a project is not completed or when a grant recipient hasn't complied with the terms of the grant. This is essentially our version of that. So this isn't meant to put off entities who are thinking about pursuing this, but more expose the commonalities of this process and maybe processes with the federal government you might be more familiar with. Next slide, please. And then two other ones. If the payment doesn't come until after a project has been put into service, where does the upfront funding come from? I mentioned that a little bit a moment ago, that this is a tax credit, which means it does not help with the upfront funding cost. But using bridge or debt financing of the project, debt generally does not affect the direct payment election. Tax exempt bonds can be used as a reduction of the underlying credit amount. And the back end process for direct pay. So that's, where payment does not come until after a project is complete and placed in service. It's not very different from federal funding where state and local governments are reimbursed for actual costs, such as in the case of FEMA disaster funding. And then lastly, my organization is very small, as I imagine many of you on the call represent, and I worry that this is all too complicated to implement. I mean, there's no question that every organization, every nonprofit and state and local government needs to make a judgment as to whether they can effectively and efficiently implement projects that could benefit from financing through direct pay. For smaller organizations with concerns about capacity, there may be several operational alternatives to consider, including seeking and receiving technical assistance and advice from other organizations, including state governments and nonprofit organizations. And I'll use this as a moment to give a shout out to the Department of Energy, who just launched their own technical assistance for elective pay. And they'll be having more information in a webinar on July 25th that the Hoyer team will be circulating with you all, so that you can determine whether or not that's something that you could potentially benefit from. And there are a lot of other outside resources and groups. Lawyers for Good Government is one that's providing technical assistance as well, that can help you outsource potentially with some of these questions you have that you just don't have the bandwidth or the employee base to do internally. And then lastly, when you think about projects, think about pursuing projects where other higher capacity applicable entities may play the lead role in project development. And then you are the ones that seek and receive direct pay by owning the project. So there are ways to stack this. There are ways to think about managing the information flow and the technical assistance and the support that you all need to make this work. But I certainly hope that through some of the examples you've seen and others that I know you'll hear about on the call today, will encourage you to pursue something yourself. Next slide, please. And as I had mentioned, there are a ton of resources already available. So I'll make another plug for irs.gov/elective-pay, where you will see that list of applicable tax credits. You'll see the various resource sheets that are available for nonprofits, for state and local governments, all meant to help you figure out how you can pursue these opportunities. Next slide. And again, more resources because you cannot have enough. All of these handy dandy links here across the White House, Treasury, the IRS. And again, that subscription to the IRS is so important if you're looking for day-to-day updates. Can all be found here and will be in the deck that was circulated. So with that, thank you so much for your time. And I see the Congressman has joined us. I'll turn it back over to you, Mr. Hoyer.
Well, Rachel, thank you very, very much for that presentation. You know, Rachel knows this, but for all of you, I've had an agenda since 2010 I've called Making It in America. And the investments that we made in the rescue plan, in the infrastructure plan, in the CHIPS and Science plan, and in the IRA are the biggest investment in making sure that America is self-sufficient. One of the things that the pandemic showed us was that we were relying on a lot of unreliable sources, and our supply routes shut down, and the manufacturing community was adversely impacted. And the CHIPS bill, an extraordinary bill, and Rachel once worked as the head of manufacturing policy for Ford Motor Company. So she's had wonderful public sector experience, working for the chair of the Senate Finance Committee, and now working for the administration, but also working for the manufacturing community itself. So she's really knowledgeable from all perspectives. And I want to thank her very, very much. The information you just received, and I was able to see it. As you can see, I've switched venues. I'm not sure what that was my office I was in, and it didn't work very well. But in any event, the information you have just received obviously can be worth thousands and thousands and thousands of dollars for your organization, doing things that we think will help the environment, help the economy, help create jobs, and it's an investing in America success agenda. And I just saw on the screen here that the League of Conservation Voters is going to make sure you have the slides available, because I know as you're going through and Rachel's talking, you sort of get an idea. But then if you're like me, I'm a highlighter. I highlight things. And when I do that, of course, I go back over them to try to imprint them on my brain. But this can be an extraordinarily advantageous for you, your organization, and for our country. And so our job, my job, Rachel's job, is to make sure that the citizens know what we have made available, know how to access the benefits that it gives, and turn that into the kind of productive objectives that we wanted to achieve. So, Rachel, again, I thank you very much. And Marissa, I'm sorry that we had so much problem getting in and out and all over. I was talking and all of a sudden nobody heard me, and I was thinking, what's happening here? But Marissa, thank you as well for the job you're doing. And I want to thank every one of you that is on this Zoom call, for what your organization does every day to make life in our communities better. You know, we all have different roles to play. I'm in the Congress. So many of you are in NGOs. Rachel in the public sector. But working together, we can turn what we did in the 117th Congress into an extraordinary rejuvenation and renewal of America's competitiveness in the world for decades to come. But we can only do that, obviously, if you know what benefits are available, know how to access them, and turn them into the kinds of objectives and accomplishments that we want. So I want to thank all of you. Marissa, I want to thank you. Rachel, I want to thank you for participating. Are you in the White House, Rachel? Is that the,
I'm right next to it. I'm in the Treasury.
Okay.
I can throw a stone over there.
Yeah, right. Don't do that. Enough people doing that. But thank all of you for participating. Thank you for what you're going to do with this information and turn it into extraordinary positive accomplishments for your organization and for those of us who passed this legislation to empower America to be a better country, a more productive country, creating great jobs for our people and doing great things for our people. Thank you very much. I'm going to
Thank you,
sign off now.
Congressman Hoyer.
Thank you.
Bye-bye.
Thank you so much.
And for everyone who's still on joining us, we do have one more speaker. If I could get Gino Cap to come on video. Okay. Hi, Gino.
Hi, Marissa.
All right. So Gino was willing to come on today just to say a few words about a project that his organization, National Housing Trust, is working on that is using direct pay. So go ahead, Gino. Thanks.
Thank you, Congressman Hoyer and Marissa. Direct Pay allowed NHT to expand a developing portfolio from 8 to 13 projects through the direct cash provisions. We were able to use all of the buildings receiving federal low income tax incentives with a low income houser, and we were able to add over 200 residents to this portfolio to help them receive renewable energy at a reduced rate. This portfolio will lead to over $6 million in savings for the client over the lifetime of the system. And because of the provisions, we will not have to bring on a tax equity investor, allowing NHT as the developer and investor to keep more of the revenue from the projects. And these funds can be used as capital for more projects in the future to help bring renewable energy savings to more low-income residents. The process to qualify with the Department of Treasury requires all of the project documentation to include the plan for your system, a benefit sharing calculation and statement, entity documents, and the low-income housing covenants for the system. Our development team is a 2-person team, and we were able to navigate the application process very easily. We have received our allocation approval letters from the Department of Energy, and we will move forward to our second application with the IRS once we have authorization to operate once construction is finished, and we start construction in Q4 of 2024. So we will be receiving, we should be receiving funds beginning of 2025 from most of these systems. Thank you, Marissa.
Thank you for sharing that information. And if I could have you stay, and Rachel, if you're still on, we will just check with our participants. I wanted to give everybody a chance to ask any questions at this point. And we don't have any. If people want to use the Q&A or the chat is available, feel free to ask some questions. I just had one follow-up, Gino, for you. One of the things that Rachel mentioned was having that upfront funding available for these projects. Is it my understanding that you're working with a green bank to fund some of this project?
Yes, we're working with Montgomery County Green Bank to fund those projects. We've also had to bring on, we're going to have a couple of lenders for that loan, because the systems, the construction of the system is going to take about $10.5 million. But once we have constructed everything, we're going to have about $7 million in direct pay cash come to us. So we'll use that to help with closing of the permanent debt, and that will reduce our payments on the debt that we'll have for the system pretty substantially.
That's great. That's a great example. We really appreciate you coming on and sharing that. And then the other thing I just wanted to ask, Rachel, you did a great job of sharing all of the cost benefits. And I know that's your side of this equation, but wanted to sort of talk through how we see these cost benefits helping reach climate goals. In Maryland in particular, we have very ambitious climate goals, and how are these funding projects helping to put those things in place?
Sure. No, that's a great question, Marissa. When we think about those applicable tax credits, I think the biggest ones when it comes to emissions reductions are certainly going to be the investment tax credit or the production tax credit. So we're talking about generating and using clean energy in a way that we haven't used before. And certainly that's so important when we think of tax exempt entities and state and local governments, but we think about reaching those larger emissions goals, right? It's really going to be driven by that private sector investment. And while all of these credits I talked about are available for all of you, they're also available for large businesses too and manufacturers. They can just claim it like they normally would as a business credit, which is great. So by using direct pay, the idea with this force multiplier, right, is that we are now inviting more people to be part of that system. So instead of just relying on the private sector to reduce emissions, which they are going to do because these incentives are so compelling, we are now offering it to everybody as well. So when we think about the types of reductions that you can get by using solar and wind energy instead of other traditional forms of energy that create more emissions, certainly on that production tax or the investment tax credit when you're building and creating new facilities, or potentially, what's the word I'm looking for? Remodeling them in a way that will make them more efficient. All of that will help reach those broader climate goals that we're seeking to do. But again, it's going to take everybody working together. And that's why making sure we have this information out to the nonprofit community who is not operating like a business, who has never claimed a production tax credit before, that they have the information, that you're telling your friends about it, that other nonprofit communities are talking about it. We're in that early stage of adoption where the echo chamber is so powerful. And we're not going to get there unless everybody starts to get involved. And that's what will create, I think those broader emission goals that the state's looking to do, that collective effort together as a community to bring these emissions down.
Thank you. Absolutely. It will take an all of government, all of society approach to achieve our goals. I also wanted to ask one more question that we did receive in the chat. Someone was talking about their organization had registered through the Energy Credits Online portal, but what they saw there looked to them very relevant to vehicle manufacturers and dealerships. I guess they were looking at the EV credits as opposed to what they might expect to see as a nonprofit. How can they help? How can you help them navigate that? Or
yes, there are two portals within IRS Energy Credits Online. One for dealers and manufacturers that is specifically for the EV tax credit. So you might have heard about this. You can get a tax credit if you buy a clean vehicle, but then there is a completely separate portal for elective pay and transferability projects. That's what you would see in IRS Energy Credits Online. And there's also a portal, it's not IRA related, but Congressman Hoyer mentioned this, CHIPS as well. There's a tax credit that is in the CHIPS and Science Act that manufacturers can also apply for. IRS Energy Credits Online houses all three of those services. So when you are logging in, there's a step-by-step user guide on irs.gov/elective pay that will show you screen by screen where to click through. You're going to want to click on that portal that takes you to elective pay and transferability. You do need to fill out a business account with IRS first through ID.me. That is step one. And then from there, you can select the portal that you want to register your project through. So Marissa, if you give me a minute, I can put a link to the user guide in the chat. And that way you can click through and see what's most relevant to you in the step of the process that you're in.
That's very helpful. And it sounds like that's exactly what they were looking at. So thank you. Don't know if we have any other questions. We'll let Rachel bring up that information. I also have Cindy from, she is the Director of Renewable Energy at Montgomery County Green Bank. And she has mentioned to us that she is on with us today as a watching the webinar, and just wants to let people know that Montgomery County Green Bank is there and available to help with renewable energy projects, like Gino had mentioned, that's the partner they're working with. And so maybe we can send their information and the other Maryland Green Bank information when we share out all of the resources from this webinar.
It's taking my internet is slow here at me in Treasury. Give me a minute. If we aren't able to pull it up in time again, yeah, it looks like my internet's down. So if not, or the internet system is down. So again, this is where after the fact, hopefully, Marissa, you guys can package up all of these great materials and send out to everyone. It's great that there are so many resources, but then oftentimes you're wondering, where do I start? So hopefully a bundle of materials coming your way will be useful.
Very much so. All right. Well, thank you so much. I think that With that, and with no more questions coming through, we will wrap up today's session. Hopefully this was really informative for everyone. And like we've just said, again, we will share out many resources from this. And hopefully this will just be the beginning of more sessions where we can help provide all of the information for all of these opportunities available through IRA and the federal government to help bring down our costs, reach our climate goals, and all work together for a really bright future. So thank you so much, Rachel. Thank you, Gino, for joining us. And thank you everyone who joined us today for the webinar.
Thank you.
Thank you.